going on, everybody, and welcome to Money Talks with the Black Sky Group with your host, Latrice, the Forex Queen, Will, the Stock Market Bully, and me, Anthony, the Godfather Norwood, here to discuss all things finance when it comes to building wealth and residual income. This week's show is sponsored by Personified Solutions. Services include credit, counseling, and debt settlement. For more information, go to their website, www.personifiedsolutions.com. That is www.personifiedsolutions.com. And let's spell it out for them, Latrice.
That is PERSONAMEANT Solutions.
Spell it again. You went too fast. Spell it again.
PERSONAMEANT
Yes,
Solutions.
ma'am. Yes, ma'am. All right, so let's do a quick recap. Last week we discussed our why as a group, and we talked about our why as an individual, which was, to me, was a powerful segment because we was able to get out why we do this as a group, and then we was also able to talk about our individual whys. I think people hearing our individual whys probably touched them personally as well. All right, and also we had Miss Sylvia Glanton on the show. She's an entrepreneur out of Fayetteville, North Carolina, and also the owner of the company that sponsors the show, Personified Solutions. Then we discussed market manipulation from equities in the Forex market. So real quick, Latrice, give us a quick recap of market manipulation from the equities market. The Forex market.
So looking at market manipulation, we talked about how it's 10% skill and 90% psychology, which is proven that the market is emotionally driven. So we talked about how you may hear people talk about the news and tweets and all those things and how that tie into moving the market, whether it's up and down. So a tweet from the president or anything that's going on like COVID-19, those things kind of move the dollar. And so we base that on how we trade, whatever is traded against the U.S. dollar.
Right. And Will, from the equities perspective, what did you talk about for market manipulation?
So for market manipulation, we kind of tied back into one of our, a topic that we spoke of before was retail versus institutional. And we talked about things like if I have a penny stock, it's a lot easier to manipulate that market because with less money, I can have bigger moves. In the same way, we can make a lot of money by seeing what's being manipulated by those big traders in that dark pool to see where they're going to push where they're going to push the stock is where we're going to come behind them. They may make a meal, we may make a few hundred, but guess what? We made some money.
Piggyback off the dark pool, baby.
Let's get that lunch money.
All right, get that lunch money. I like it. Lunch money. And also, we talked to Miss Sylvia Glanton, man. That interview was extremely informative for a lot of people when it comes to talking about credit and credit rating and how to build your credit and maintain that importance of having that good credit rating. All right, so this week's show, we have a special guest in the building today. We got Mr. Brandon Hanks, all right? He's a real estate investor in the single and multi-family homes market. All right, we'll also discuss the game theory investing. We will discuss the importance of having a good business organizational structure and finish with market structure, bullish and bearish engulfing, and trap candles?
Trap candles.
Trap candles. All right, so before we get to it, man, first of all, I want all our listeners to go join the Black Sky Group on Facebook. Search BSG Capital Group on Facebook. We put out daily trades. We give out essentially the answers to the test. That's what we do. All right, so let's get right to it. As a matter of finance, Will, the stock market bully, talk to us, man. Talk to us.
First and foremost, good afternoon, BSG. I want to reiterate because in the group, we're going to start to do some different things. Make sure you're downloading the platforms. Make sure you go and look at that tutorial we put out so that you can download TD Ameritrade so you can use Thinkorswim. Make sure you download Robinhood so you can trade day to day. And also, once we get you started, there's a lot of other investment platforms, whether it be Webull, whether it be E-Trade Financial, that gets you the ability to do some more advanced trading strategies with less capital. And I'm going to leave it at that because I don't want to confuse anybody. But definitely download the platforms so that we can get you trading. Secondly for the day, and it's the part that everybody's looking forward to, it's game theory. I know a lot of people don't know, have heard about it, you've seen it. Game theory in investing it deals more with mindset. So let's define it. Game theory is the study of strategic decision making. It brings together disparate disciplines such as mathematics, psychology, and philosophy. The importance of game theory in modern analysis and decision making can be gauged in the fact that since 1970, as many as 12 leading economists and scientists have been awarded the Nobel Prize in Economics and Sciences for their contributions to game theory. What that means is it is a prevalent theory in every facet of life, but it also matters in investing. Right. So that's the first layer of that cake. Let's talk about the next layer of game theory that we'll look at. And we're going to build this one, guys. Stay with me because I promise you I'm going to get to a point. We're going to talk it out. The next thing we'll talk about is the Nash equilibrium. The simple insight underlying the Nash equilibrium is that one cannot predict the choices of multiple decision makers if one analyzes those decisions in isolation. Instead, one must ask what each player would do, taking into account what he or she expects others to do. That is really confusing, I know. What that means is you don't know what the next person is going to do.
Facts.
So don't make your trading decisions off of what somebody else is going to do. You have to be your own decision maker.
Absolutely.
This is quantifying it in economics and mathematics so everybody can know what we're looking at.
That sounds like a game of chess.
It is. And that's what we look at it, because we want to know where we stop our losses and gains, so we won't be looking at losing a lot of money or chasing gains that aren't there for us, because that's what traps a lot of traders.
So you just said don't make a decision off of what someone else is doing?
Yes.
Can you apply that to playing poker too?
Absolutely.
Oh, okay.
It's the same thing used. Now, let's look at layer 3. This is the big part that's going to bring it together for us. A guy named John Maynard Keynes, who was a huge economist. He came up with the John Maynard Keynes beauty contest. It does not matter what the analysis, fundamental news, or evidence suggests. It is the weight of buyers and sellers that matter. The market rarely conforms to what appears to be the facts, but rather that is human emotions that drive the markets. Keynes compares selecting investments to the way people made choices of newspaper beauty contests. These contests involve newspapers publishing photos of hundreds of beautiful women. The reader whose choice was most closely matched the 6 most popular selected women would win a prize. Keynes wrote, "It is not a case of," and this is the most important part, guys. I'm sorry, but stay with me.
It's all good. Go. Come on.
Check it out. It is not a case of choosing those faces which the best one's judgment are really the prettiest, nor even the average opinion generally thinks is the prettiest. We have reached the 3rd degree where we devote our intelligence to anticipating what the average opinions expect the average opinions to be. Guys, really advanced. So listen to this. Let's apply that to trading. I don't have to know how good a company Apple is if I'm trading short term. Right. All I need to know is, does everybody else think Apple is a good company? How do I know if they think Apple is a good company? Apple's going up. Yep. So I ride the trend, and then I pull out once that trend is done. It's a more advanced way of looking at the stock market, and I say that today. Right now we have 20+% unemployment, but the market's still rising.
Yeah.
This is why it's rising, because somebody out there is saying it could get better, and as long as somebody's willing to pay for it, somebody's willing to buy it, and that's where we make our money in those options trade.
There's always that optimism out there that'll drive the market as well.
Absolutely.
You know what I'm saying? Because you'll see news outlets or articles out there say, well, COVID is ending,
yes,
and we expect the market to skyrocket. Guess what people do?
They go buy.
They start buying on the false pretense that the whole pandemic is automatically over. You know what I'm saying? And then on top of that, what you talked about in previous segments was how the Fed pumps money into the economy as well.
There we go. The good old Fed.
The good old Fed. How they pump money into the economy as well to keep it afloat, because they will not let it die.
Yes.
They're not going to let it die. So that can also give you a false pretense of the market as well.
Absolutely.
Right? So, good one.
Yeah, a little bit of thinking, guys, a little bit of research. Remember, just take away John Maynard Keynes and the beauty contest if you want something to watch. And game theory. Look up the different types of game theory. You can Investopedia, and they'll give you all kind of fun ways.
So that's game theory, like football game.
Football game theory.
Game theory.
Yep.
Oh, I like it, man.
That's GAME.
Good job, Latrice.
Oh, you can spell today, huh?
Just spelling bee champ.
Spelling bee champ? What, in kindergarten? That don't count. Spell red. I didn't think so. All right, anyway, hey, check it out, man. Like I said, we have a special guest in the building, real estate investor, Mr. Brandon Hanks. My man, what's going on, brother? How you doing?
Pretty good. I'm glad to be on the show.
Are you?
Yeah, I'm glad to enlighten the people about the real estate market. I learned a lot from you guys from the stocks.
Really?
So I'm ready to put my insight in.
And by the way, he is an actual member inside the BSG Growth Capital Growth.
I'm in there.
Yeah.
And since I've been joining, I've been actually trading, and I have been profitable.
Nice.
Say that loud again.
I have been profitable.
Why have you been profitable?
I've been following the answers that you're giving me every morning.
What?
Every morning.
What?
So
you're telling me that the trade setup that I put out in the morning, every morning, is helping your portfolio grow?
I mean, I would say this. I could pretty much, what I made last month, I could almost supplement my working W-2 income with.
Wow. That's what I'm talking about.
Yeah.
So you made a few thousand off of the trades that we put in the group daily.
Yeah, I mean, to be exact, I mean, I'm not hiding no numbers. 4,400. I made 4,400 within the last month.
That's what I'm talking about. Supplemental income.
Yep.
Supplemental
When we talk about real estate, you got to talk about numbers, or it just doesn't make sense.
And you know what's crazy?
You got to talk about numbers.
Look, people are afraid to talk about money, but this is what this show is all about. Talking about the money residual.
Don't be scared to talk about money.
Don't be talking about it. I know it's taboo to some, but no, we love it.
Yeah, got to.
You know what I'm saying? And
the only way you can help somebody grow is to know, hey, where you at? What are the goals, and how can we get you there?
And especially if our group has helped you do that, man, that's awesome. You know, I'm glad you're a member.
You.
All right, so Brandon, man, aside all that, man, tell the people who you are and what you do.
So I'm from. My name is Brandon Hanks. I'm from Chesapeake, Virginia.
757. What?
Sark City.
Sark City, baby. Yeah.
So, yep, I'm there right now.
Shut up, Latrice.
Just had a man bonding moment. But go
Well,
ahead.
we did.
757, you know?
Baby, stand up.
So, other than that, I've been real estate investing for 5 years. So that's kind of what I want to get into, is a story of like how I was able to get that snowball to grow so fast over 5 years. Most people do it for quite a few years, and it just doesn't grow as fast. But I want to share my story, and
that's cool. So my next thing for you is like, how did you get started in real estate, and did you use your own capital to get started?
Okay, that's a good question. The first house that I purchased using a VA loan, which was a 0 down payment. Okay. And going into that deal, purchasing it, I knew it was going to become a rental. So I didn't want to have any emotional attachments to it. I didn't want it to be any big grand house, because I wanted to make sure it could, I can make some profits off of rental income.
Right. Okay.
So I bought in that price range where I'm like, this is going to be a rental income within a year. Right. And so that's how I got my first property going. Okay. And from there, I saved a little bit of money over a couple of years, and I used a conventional loan to purchase my second rental, which is a single family home. Yeah. And it was a 20% down payment. So for people that don't know, for the residential loans, if you're going to do a single family home, conventional, you're going to do a 20% down payment. For multifamily, as 4 and above, they're going to be considered commercial loans, which is 25% down payment. So, that's the difference there. And then you also have the choice of doing the FHA, which everybody has a FHA opportunity, and that's a 3.5% down payment. So that's a kind of a lot of people have the opportunity and don't even know it. They think automatically they got to throw all this money down the house. 3.5%. I mean, people can usually scrounge that up, borrow a little bit, but
that's cool. Okay.
So when you're talking about your getting started, are there any classes or reading material, anything that you would recommend for somebody who is wanting to kind of step into that field or that industry?
Absolutely. I think where it actually took me to the next level of education is when somebody told me about biggerpockets.com. And that is a real estate investing platform altogether from all aspects. Real estate investors, agents, accountants, lawyers, property managers, anything you can think of is in there, and they have the self-education. They have their own publishing, so they have a bookstore that has some of the best books I've read in real estate, and also they have forums. You got your local forums, so you can actually do group meetups monthly. So one of the big things is how you get into real estate is kind of you want to surround yourself by what you want to be. You want product of your environment. You surround yourself by real estate investors. Gotcha. Eventually, you know the walk, the talk, and then you just become a real estate investor.
Man.
Is that site? Is that a subscription, or is that something that you can just log on?
It's free. Biggerpockets.com. Just sign up with your email address.
Biggerpockets.com.
Bigger Pockets.
Yep.
Okay.
I like that name.
I like it. Well, that's a really great name.
That.
Especially for what we do. We love that. So in other words, you don't have any formal education in real estate.
No. Well, so 2008, I was went to do my real estate agent's license. I was actually a licensed real estate agent.
Okay, so you do have formal education. Okay.
Yeah, I did, but just for like selling houses. I had an interest in real estate, so I went ahead and did that. And unfortunately, it was 2008. So I never sold a house.
We all know what happened.
So you never sold a house?
I never sold a house.
So you never sold a house, huh?
Never sold a house.
Doggone, Brandon.
So
you might be the worst real estate agent
ever.
I am the worst real estate agent.
But a good
I got some
investor.
good insight. I got some good insight. And what kind of drove me to do like stocks and real estate was, my mom kind of sat me down one day. Was like, "You look like a lost soul. Let me just tell you, if you want to be making money, everybody in this world is that has a lot of money is either going to be doing stocks or real estate. If you ain't about stocks and real estate, then you ain't about money." And from there, I was just like, I'm on that road and I'm not looking back.
And you decided to do
You
both.
do both.
Yeah, exactly.
Nothing wrong with that. I want to do
About that money.
I want to expand my portfolio to commercial real estate.
Oh, yeah.
That's my next venture. Yes, sir. So I heard a term called house hacking.
Okay.
I heard about it. Can you explain to us what house hacking is?
Yes, and I'm familiar with the term. Unfortunately, I wasn't able to take advantage of it. But house hacking, an aspect that I know the best is somebody who can probably use like a VA loan or FHA loan. They can purchase a multifamily home with that VA loan or FHA loan and literally do like no down payment or 3.5% down payment, as long as they're occupying the property, one of the units. So it could be a 4 or 6 unit property. They could buy the whole thing with that loan, as long as they occupy one of those units.
Oh.
Yeah.
So that can be a big jump start to somebody's real estate investing. I mean, that'll put them ahead of like most people real estate investing now, just with that very first deal if they do it right.
So is there a time frame that they have to stay in that property?
So there's never been a regulation as for time frame, but most people suspect a year is good. Like you do 1 year in the property and you'll be all right. But
Okay, so it has to be documented as your primary residence.
primary residence, yeah.
Or-
Nobody's actually said how long, but as long as you occupy as your primary residence, most people, if you talk to real estate agents, they'll say usually a year is what people look after. But if you don't, then they'll probably do a due on sale clause on your loan,
Yeah.
and that just means like the full amount of your loan is due right now. We don't know what you're going to do with the property.
Wow.
But
What?
so yeah, you want to definitely follow those rules. If you do that, you know, you want to go ahead and just suck it up, occupy one of those units.
I feel
Jump-start
terrible,
it.
man.
Jump-start it.
I thought a house hack was like just the Wi-Fi. You just put me
Yeah,
on something
yeah,
brand new. I appreciate it, man.
I mean, because you think about it, for multifamily, like we were saying, it's 25% down payment.
Right.
You're keeping that cash in your pocket for a $200,000 property. That's $50,000 you're keeping in your pocket. If you just use this house hack and you just suck it up and live in it for a year,
It's not bad at
And now
all.
you can use that $50,000 and go invest in another multifamily home. Now you got 2.
Yeah, and then essentially what you could do with house hacking is something I read up on. 'Cause I've been researching ever since we had our initial conversation. Like, if I'm in that property and you got 6 units, those other 6 gonna pay for my property, my unit anyway.
Yep.
Oh, yeah,
So I'm
you're gonna profit.
essentially living for free in this area.
And you'll be putting money in your pocket.
and putting money in my
You'll
pocket.
be putting money in your pocket, yes.
Man,
Let's go hack some houses.
let's go. I'm down.
I got my computer right here.
I'm down. Hey, Latrice, we have some questions from the audience as well, right?
Yes, we do have some questions for us. So if you have questions, hey, hit me up. I'll get them asked on live. So one question. So a lot of people, I know like myself, big HGTV fans. So how does
I love HGTV.
real estate investment and flipping houses or rehab housing, is that kind of one and the same, or is that 2 separate things?
So flipping houses and rehabbing houses, there's different strategies of investing, of course. There's one called the BRRR method, which is the buy, renovate, refinance, rent, and redo. So you're doing all those things. And then you got flipping houses where you just buy it, dump $30,000 into it, and the price is going to go up and you know maybe make 20 or 30,000, 10,000, depending on how fast you're trying to turn them out, what your process is. But the BRR method is you're pretty much buying a house, rehabbing it, and then you're at the end you're refinancing it and getting all the money you bought, you put into the house. You're getting it back, and you're putting a tenant in it, and so you're getting your initial investment back, and now you have a rental property that's being occupied, and then you got that money back. So now you can go do it again, rinse and repeat.
Nice.
Gotcha.
So when it comes to flipping houses versus investment properties like multifamily homes,
Yeah,
the payout for flipping a house is like lump sum,
lump sum. Yeah.
and then the difference in that is if I have a rental property, it's just streamlining income.
Residual income,
Yeah.
monthly, which that's what I'm looking forward to. Is like my long-term goals. Like I don't want to be a millionaire per se. If I come into $1 million, like great, I'm a millionaire. But
Absolutely.
if somebody said you could either have $1 million or you could have $20,000 a month for the rest of your life, I will take that $20,000 a month for the rest of my life.
Of course.
And that's what I'm looking for, the residual income.
Oh, okay. I get what you're
I
saying.
see what you're saying.
That's what you're
Versus
So
doing
backwards
house
plan,
flips.
like where do I want to be? I want to be at $20,000 a month. Now I'm building up to the backwards plan of how do I get to $20,000 a month? My goal.
I got you.
Okay. all
Different
right.
way of thinking about it. I like that. That's a different mind.
No,
That's,
no,
that's a paradigm shift.
No, that's really good because if you tell somebody I give you $1 million now,
They take it.
Versus $20,000 for the rest of your life, a month.
Yeah.
They're gonna take the $1 million. Like, no. Back up. Let me take this $20,000 a month for the rest of my life.
Unless you know how to make that $1 million shake.
Exactly.
If you know how to make it work, then
if you take that $1 million off the rip or for lump sum versus the other option, you really don't know how to make that $1 million shake.
Nah.
Because you don't understand how money moves.
Exactly.
You know what I'm saying? But don't worry, if you don't understand how money moves, you come listen to our podcast, Black Sky Group podcast, all the time, baby. You come listen to us. We'll teach you how to make that money move.
I know you mentioned, like, how did you get your money for, like, my first multifamily home, which is like a big lump sum of money. Like, my first multifamily home, the down payment was $40,000. Like, oh man, like, how can I come across $40,000? It was actually the way I use some assets. So it was actually an accident my wife got into, right? She ended up getting a payout for a car. The car was totaled. So it's like, all right, we're going to give you $25,000 to get a new car. And I said, you know what? Rather than taking that $25,000 and buying a car, we're going to hold that $25. You're going to get a car loan and we're going to get a new car. But now you're only paying $500 a month for the car. So I combined that with, I just had about maybe another $15,000 laying around. I don't know, $15,000. But yeah. So I started searching the market. I started searching the market, and then I put it into an income-producing asset, the multifamily home. So now the car only costs $500 a month, but this asset that I have is producing me $1,000 a month for the rest of my life. You know, where somebody would take that $25,000 and throw it in the car, don't think about it, and now in 6 years that car is worth nothing
at all.
Exactly.
$0 mil.
Yeah.
So that goes back
to that mind frame. You have to have that.
That goes back to a conversation we had. You hit something that we talked about on one of our first episodes that we launched is the stimulus check. Everybody got $1,200 or however much you got for your family, and a lot of people took that and just went and paid their bills or you know, bought a TV.
Yeah.
Well, we were talking about, hey, if you take that and hey, tell your landlord, hey, you know, here's $800. Let me keep this $400 to myself, or let me put that into something I get some return on income capital. And you did exactly that and turned that into multiple family homes. That is genius. That is what it's about.
I think the majority, 9 times out of 10, would have took that $25,000 and went to the car shop and just threw it on there.
But you didn't do that, did you?
No. And that's what kind of took me to the next level as well. It's just like thinking smart with that money.
Yeah, good point, Will. When we talked about the stimulus, you're absolutely right.
Because it's gonna be coming around again. Like that's what we're pricing into the market. I know we're getting off real estate for a second, but the market is pricing in another stimulus check that could potentially be bigger than the one we got the last time. So everybody should already be planning on their next move and using this time to educate yourself. Because if you missed out on the last time, you get a redo potentially. Be ready when that redo comes up.
Yeah, I like
So I have one more viewer question.
Go ahead. Viewer questions.
What do you recommend for someone obtaining their second investment property, but they've already used their FHA loan for their first investment property?
What I would suggest for that is if they've already used their FHA, maybe if they build up enough equity into it, they can refinance it as a conventional loan. So once you have a 20% equity into the house, you can refinance it into a conventional loan. And once you do that, that frees up your FHA. Now you can go use that FHA again. But then you're probably going to have to live in it. So the initial house that you use your FHA in, that's going to be a rental, and now you're going to go buy another house to live in with that FHA that you just freed up because you refinanced it to a conventional.
For the 12 months?
Yeah.
Okay.
And that's how I would do it personally
if
I was stuck in that situation.
Hey, tell the people, is there a cap on how many mortgages that one person can carry?
So from my understanding, talking to lenders, 10
mortgages.
10 mortgages is going to be your cap. Right now, I'm trying to do some restructuring myself because I'm at 7 mortgages right now. So I got 3 more left, and that ain't the end of my real estate investing. I need lots more. So what I'm trying to do is I got 5 single family homes, and I have 2 multifamily homes. So the multifamily homes are generating more money, more profit per mortgage. So I got 8 doors for 2 mortgages, where the other 5 mortgages only have 5 doors.
Right.
So you sell one, that opens up another one for multifamily. So I'm gonna start selling my single family homes, and that's just part of like real estate investing. Once you get bigger, you know, when I first came in, I said I'll never sell a house. But now getting smart in the real estate game, you're like, I gotta sell some houses. And,
but didn't you suck as a real estate agent?
I did. I'm not gonna sell them. I have a real estate agent I deal with all the time. So.
The real estate agent has a real estate agent.
Yeah, real estate. Yeah,
that's true.
Exactly.
I'll just phone you. You're good.
Shout out Julie.
Yeah. She's good?
Yeah.
All right, man. So I got one more question for you, Brandon. And then this is 2-part. how have you structured your properties? Like, did you form an LLC for each property, or do you have just like one umbrella in which you form an LLC to put your properties under?
Yep. So what I have done is got an umbrella coverage, and that's like $1 million policy that you put over top of all your assets. You can include your cars and everything. So each individual house has their insurance policy, but then there's an additional $1 million policy just in case something happens, accident, somebody hurts. Like that's like the biggest fears. What if somebody gets hurt in my house and they sue me for $500,000? This will pick up wherever that initial insurance policy left off. You have an additional $1 million. So that's probably like the easiest way to do it for me at this point. But I know that there's other ways of doing it, such as creating an LLC for each individual property.
Yeah.
That's like putting those firewalls around each property so one lawsuit can't bleed into all your properties.
Right.
Yeah.
Or you can put all your properties in one LLC. If for accounting purposes, maybe that might be easier. And I think for professional guidance, consult an accountant or a real estate attorney for that. Everybody's situation is different.
That's cool. All right, but speaking of structure, man. All right, for my entrepreneurs out there, all right, it's imperative that you pay close attention to your business organizational structure. All right. In order for you to become more profitable and grow, you need to have good organizational structure. That's the bottom line. Because if you don't, you can fold easily. Because that almost happened to me when I first initially started out. In the beginning, I was just starting out. I didn't understand organizational structure at all. I was just I was growing off of hype and the work alone. But I had no bookkeeping that, you know what I'm saying, that was made sense. I was just doing stuff, so to speak. I was just out here doing stuff. But I was growing, it had the social media buzz and all that, you know what I'm saying? Yeah. My company was growing, but I had no types of structure, right? So, like I said, I almost folded. And then I had a mentor. My mentor came to me. He said, hey, man, you're doing some good work out there, but let me see your books. Tell me what your future projections are. You know what I'm saying? What does your staff look like? I couldn't answer not one of those questions. I just couldn't. As a young entrepreneur, I could not answer. I like, oh, well, my books, I don't know. Oh, okay. My staff, I got friends that help me out. You know what I'm saying? Mm-hmm. My future goals, I don't know. I think I want to do a boot camp for people. You know what I'm saying? Yeah. That is not what he wanted to hear. You know what I'm saying? In order to grow profitable and grow and scale your company, your organizational structure has to be tight. So, all right, here's some nuggets that he dropped on me. The first thing he said to me was, and I talked about this, I think it was episode 3 or 4, whichever one, go back and listen to both and tell me which one it is, all right? So the first thing he talked to me about was building the correct team around me. If you guys remember, I talked about that previously, all right? Like I said, I spoke about this in episode 3 or 4. Go listen. You have to ensure that you put the right people in the right positions, all right? And plus, they have to have the skills to accomplish those positions that you put them in, and also understand the company's goals. They have to understand your vision and the company's goals in order for you to be successful and grow. And I did not understand that initially. I just had people that was cool. They had no mindset. They had no entrepreneurial spirit. You know what I'm saying? They had no vision. You know what I'm saying? So I almost tanked because of that. You know what I'm saying? All right? Also, you as the entrepreneur, you have to clearly articulate their duties and responsibilities. Mm-hmm. They have to know what you expect from them. All right? You have to. So for me, I wrote a philosophy for the company, and also wrote a mission statement, whatever. Yep. But the philosophy is where I dove down and got into the weeds, and those people understood what I wanted, what it's supposed to look like. You know what I'm saying? So that helped me out with my staff. All right. The next thing we talked about was the planning aspect, right? All right. So me being a 131 Alpha in the Army, right? You know what I'm saying? So I'm a targeting officer, right? Which is now known as a field artillery technician. We are masters at the MDMP process, the military decision-making process. That's our bread and butter. You know what I'm saying? That's my thing. All right? So I understand how to plan in depth all the way down to the minute detail. However, my people didn't. They knew how to plan, but not down to the finite details that we needed to get to. All right? So what I had to do was, bring everybody together. Here's where that structure came into play. Everybody had to know how to plan and understand how to plan down to the most minute detail. Meaning, if you said, hey, let's do a boot camp, all right? I don't want you to say, oh, we're going to set up over here, we're going to have music, and we're going to do a workout. No, I need to know how much it's going to cost me, what resources are needed, how many people we're expecting, how we're going to do refreshments, right? Sound system. Who's going to be our sound guy? You know what I'm saying? Are we going to have medical personnel on hand, right? Those are all kind of details that I need to know. The most important one to me is how much it's going to cost me. You know what I'm saying? So, what I started doing, and I do this now, if one of my branch managers come to me and say, hey, Tony, man, I got an idea about such and such. My first question to them is, well, my first two questions is, how much is it going to cost the company? Second is, what's the first three things you're going to do to make it happen? Right? The reason I ask that question is because a lot of people will come with all these ideas, but have no vision on how to do it. Hey, let's do this, and then walk away. I don't work like that. You come to me with an idea, the question I'm going to ask you is, okay, I like it. What's the first three things you're going to do to make it happen? So planning is another piece of organizational structure that we have to deep dive into if you want to be successful and grow that company, all right? All right, so, all right, and then, like we talk about company growth. Having a good organizational structure will allow you to identify what you're lacking and also what you're thriving in, right? If your organizational structure is good, you can see where your company's lacking. I can see where we're falling short, whether it's in the marketing realm, whether my trainers are terrible, which has never been a problem, or, you know what I'm saying? It could be a multitude of things. Or I can see where we're thriving at, and we hone in on those skills as well. All right? It also provides you the ability to expand if you want to, right? If you want to expand, your organizational structure has to be on point. Now, I'm going to tell you, like, for me, my first expansion was to Baltimore. And this was like 4 years ago, right? My first expansion was to Baltimore, Maryland, all right? And that was with a gentleman by the name of T. Larkin, a.k.a. Coach Infinity. Shout out to Coach Infinity out in Baltimore, all right? He understood the vision. He read my philosophy, understood the mission statement, knew the direction of the company, and he knew what I wanted done. You know, he knew, all right? He knew how to plan. So that, for me, that expansion was almost seamless. So guess what he did? He built his team around him, right? And now they're thriving up there. Last Strike Fitness is killing it in Baltimore, Maryland right now. Those boys are still doing it, all right? So, oh, not to mention, I knew the kid, you know, not the kid because we're the same age, but I know him for years because we both from Hampton, Virginia. Went to school together. What? 757, baby. You know what I'm saying? Phoebus High School, you know. That's where we went. And, you know, we went to Spratley Middle together.
Bama.
Ain't a Bama.
Georgia.
What? Damn, Bama, stop. So that's why, to me, you got to have that good organizational structure. Because if not, your company will fold. In order to be successful entrepreneurs, man, you have to understand organizational structure. All right? I just gave you a few nuggets right there. What made, you know, how I was able to grow and expand my company. Like, we talking MBA level shit of stuff right here. You know what I'm saying? That's what we're talking. But for me, I don't have an MBA. But guess what? I'll hire somebody with one. Real quick. Anyway, so moving on. All right. So now we talk about organizational structure. Latrice, market structure from the Forex side. Let's talk about that.
Yes. So just like there's structure in real estate, there's structure in entrepreneurship, there's also structure in the market. And so that's the way I trade. When I trade in the foreign exchange market, I trade based on patterns, price, and market structure. So the market is consistent. A lot of traders are hit and miss in the market because they limit themselves by trading strategies. Strategies are good. I'm not opposed to it, but strategies only work until they don't. Structure always works. Structure is consistent. And you can find multiple confirmations if you understand structures. And for me personally, I learned it this way because I don't believe there should be one way to do anything. So the first thing I'm going to talk about is trapping the market with trap candles. So what is a trap candle? Trap candles is when you have one large candle and you have to the right of that some smaller candles that are engulfed inside that larger candle. That's a trap candle. So when I see that, I box up only that large candle. This becomes my zone. So now that I've identified my zone, the only thing I'm waiting for is a break and a retest. The breakout is my signal candle. That's telling me the direction the market is getting ready to move. The retest is my confirmation. Take the trade. So on one pair that I was trading, I was looking at the market, GBP JPY, which is Great Britain Pound Japanese Yen. So if I look at it and I see the market breaks out, then it gives me a clean retest, wick entry. The market goes up 73 pips. That may not mean anything.
Pips.
But if I'm telling you, if you put a standard lot size on 73 pips, you just made $730.
Hello.
within a couple hours.
Yeah, a couple hours.
So then the market comes back down, retesting and give me another entry. This is where I talked about before, the touch rule. We have 1, 2, 3 touch confirmation, 4 touch breakout. We talked about that on one episode 1, 2, 3, 4, 5, and 6. So go back and listen to them.
Oh,
so
she can
that
count
was
too. Oh, and she can count.
so
Spell
the
that
market
count.
will give you 63 pips on that second move. So pay attention when the market is decreasing the move. So you got a strong move, 73 pips. The second move, 63 pips. Standard lot size is what? $630. So that's a big deal. So you may not understand pips, but you understand money.
I understand
Oh,
730.
I do too.
730.
7:30 in a few hours. Stop.
So the first thing you want to do is you want to identify your zone. And that's just by putting two lines in the market. Box it up. This becomes your support and your resistance. Wait for the market to break and close top or bottom. Don't matter to me. Wait for your retest. Guess what? I'm taking a trade and I'm getting the bag.
Get in the bag.
Bloop, bloop.
Bloop.
So it's simple. People overdo when you're talking about market structure. Structure is structure. I don't care what the news is doing. Guess what? Structure is structure. And I trade naked charts and I draw my charts up. Naked charts, because I need to see the move.
Oh, okay.
I need to see the candle. Naked charts. So there's no way.
Yeah.
There's no way you can talk about market
chart.
structure and not talk about supply and demand in the market. And we've talked about this before, episode 1, 2, 3, 4, 5, and 6. So supply and demand, I'm looking at how the market is respecting these zones. So this is where I'm using the Fibonacci.
Yes.
Listen, if you don't know about Fibonacci, you better learn about Fibonacci. Maybe we'll talk about that on episode 8.
That sounds like an
So
episode.
Fibonacci.
So there you go. It's a good
Facts.
topic for next week.
So when I'm looking at the market and I'm drawing my fibs, I'm trapping the market. I'm trapping where price is, where price came from, where it went, where it stopped, where it's reversing. And that's how I'm finding where I want to get in the market. I'm in a trade right now up almost 500 pips based on market structure. On a standard lot size, that's almost $5,000 in like 3 days. So
Dang. Oh, her rich. Her rich.
So, I mean, at the end of the day, you want to make sure you understand the structure. Trust me, there are so many people that have a strategy. This perfect strategy is 99% accurate. Cool, great. It's going to work until it doesn't work. When the market goes against you, you need to know how to react. Market structure will teach you how to do that.
Facts. Well,
I'm here with the rebuttal. She ain't gonna disrespect strategies like that. We beefing today. It's competition. I've
Come
been
on,
waiting.
Debo the bully.
She don't like strategy.
Let's talk about that structure from the equities, man.
So all jokes aside, I completely I agree with Latrice in most aspects, especially when we talk about Fibonacci retracements. But the thing about equities is it helps to have a strategy. Not saying, like she said, strategies help you back test what you're gonna do. So active trading on strategies. What I mean by that is I use the MACD, the simple moving averages, the stochastics. I use volume. I use retracements, and my favorite that everybody uses is the 9, the 50, and the 200-day simple moving average. Now for equities, it's different because it's almost a self-fulfilling prophecy. I know what the 9-day moving average is. Godfather knows what the 9-day moving average is. Brandon knows what the 9-day moving average is. So when it crosses that 9-day moving average, everybody looks for it. Using the Fibonacci's, it's a form of a strategy. If that 9-day moving average is right below, let's say, the 32 percentile Fibonacci retracements, look up Fibonacci's, guys. If it's below that, we know that's going to be a natural point where we're going to see some resistance. Again, this is a lot easier said, but download the software. And what we owe you all, especially Will the Bully, I owe you tutorial videos to try to start working through it. What we want from you all, though, is a little bit of reaction. Tell us what you think about the videos. Tell us what you think about the podcast. Tell us what you want to see so that we can make this more successful.
Yes, I like that. You know, we'll take all advice or all criticism. It's all welcome. If there's a topic that you want us to talk about, hit us in the BSG Capital Growth Facebook group. Let's do that. Hey, man, so before we close, Mr. Brandon Hanks.
Yes.
What message do you have to the audience?
Oh, yeah. So coming off of the structure of building, I just want to also say that you have to kind of have a team. You know how you said you had your friends. You got to have a good team when you're doing real estate investing. And I took some notes. You definitely want to have an accountant, property manager, real estate attorney, and an agent.
But not Brandon.
Yeah, but not Brandon. 'Cause you ain't gonna sell nothing with him. But
and then a handyman, just in case you decide to do your own property management, because you hear all the horror stories about like, don't real estate invest, the toilet's gonna break at midnight and they're gonna call you. And it's like, I've never had a toilet break at midnight and a tenant call me to come fix it. It just doesn't happen. Also, like your family support. So like, my wife is a big proponent of real estate investment. At first she was just like, I don't know about this. And when she started kind of seeing it, was like, okay, the last deal we did, she found it. And she, initiated everything with it. So she's actually interested in having the kids come out, when we doing some, home improvement before we put tenants in. I'm like, all right, I'm gonna do my own stuff. I'm gonna put my own cabinet in. But anyways, that's pretty much it. And also that there are risks involved, and that's why most people are scared to try to jump into the real estate investing world, is because there's risks. There are risks. But you know what? Without risk, there is no reward. So there you go. Hop in there 2 feet.
Yeah, absolutely.
Gotta risk it to get the biscuit.
Yeah. Hey man, but thanks for coming on the show today, boss. I appreciate you. Appreciate you being here.
Thank you.
Hey, look, for our audience out there, man, if you want to be a guest on the Money Talks podcast by the Black Sky Group, email us at blackskygroup1@gmail.com. That's Black Sky Group, the number 1 @gmail.com. So here's some calls to action. All right. So if you're thinking about it, do it. I'm going to say this every time. If you're thinking about it, doing it, do it. Whatever it may be, the time is now. All right. Take a look at your structure. All right. We talked about that from the entrepreneurial standpoint. Take a look at your structure within your business and ensure that your business up and running. Because if not, you're going to fold. All right. So, and then take all the strategies that these guys talked about, right? The market structure. Apply that to your trading strategies and how you move in the market. But before we go, I mentioned Mr. T. Larkin out of Baltimore, Maryland. So I want to give them a shout out, a personal shout out, because they're, essentially, he runs my Baltimore branch, but he also has another organization that's a spinoff called, it's called BRO, right? Black Running Organization, right? So they're a bunch of runners, man. And so they're on June 2nd, they're having what's called the Bro Day celebration, right? Where all black runners connect. They connect. So you find 2 to 3 people that constitutes an organization, 2 or more, right? You just film yourself running. Hashtag, what hashtags he wants to use. He says use hashtag Bro Day, hashtag Black Run Org Day, or hashtag Let's Grow. All right, it's about we can do this around the world, man. With all the stuff going on, let's show some unity. Grab one of your partners, go out and run. You ain't got to be black. Grab your partner, go for a 2-mile, 1-mile run, film it, hashtag it those. I'm going to go through those hashtags again. Hashtag Bro Day, hashtag Black Run Org Day, hashtag Let's Grow. So, man, let's get behind this great organization up there, man. All right, so today's show was sponsored by Personamous Solutions. Services include credit counseling, debt settlement. For more information, go to their website, www.personamoussolutions.com. That's www.personamoussolutions.com. Hey, spelling bee champ, spell it out for us again.
That is PERSONAMEANT Solutions.
Really?
Is that right? It felt like she messed that up.
PERSONAMEANT Solutions.
Anybody got a buzzer or something, man? Anyway. Go to the website. So on that note, man, that's all the time we have for today. Tune in next week where we'll continue the conversations about getting started. For my advanced audience, man, we'll discuss all things hot in the economy. And for my entrepreneurs, man, hey, I'm going to always drop gems for y'all. Something to get you going and something to continue to grow your company with. But with all that said, Godfather signing out.